First up, Boris, Best Buy seeing its stock surge after reporting a profit beat and guidance hike. Shares are up about almost 14% today. What's your trade on Best Buy?
So, Best Buy is a beneficiary of very soft expectations. The market really didn't think they were going to have any kind of margin improvements. They thought it was going to be relatively stationary. And they did beat on margin improvements, and it's certainly, a very good result for this quarter. I do think, however, that the problem with Best Buy isn't necessarily their business, which I think is actually they're executing quite well, and they're moving a lot of their business towards a more service-oriented revenue, which is where their margin improvements are coming in. I think the problem here is that the type of things that they sell could be very vulnerable to a consumer boycott, effectively, should the economy deteriorate. So to me, the issue with Best Buy right now is I wouldn't want to chase the stock if you don't think, as I do, that the macro situation is going to be very strong into 2025. If we tilt in any kind of a recession, there's just going to be naturally a pushback from consumers to buy any kind of electronic goods, and that's going to impact their bottom line going forward.
Well, here's maybe the same thesis in part would apply to our next stock, and that's Dollar General. Sales there plummeting, retailer missing Wall Street expectations on the top and bottom lines. The company cut its outlook, blaming financially constrained customers. Yeah. Shares are down 30%. What do you do with this one?
So, temptation is down 30%. Temptation here to bargain hunt, I think that's a big, big mistake. I think it's very much like catching a falling knife. As you said, they said that the consumer base is constrained, and I don't see it getting any better going forward. In fact, I see it getting much worse, because if the labor situation begins to deteriorate, who's going to be suffering the first on the casualty line? That's going to be their consumer base. Now, in the midst of all this, they still continue to do a very massive capital spend. They're going to try to open up 700 new stores in what I think is pretty much an oversupplied market. So given what they're doing, it's no surprise that the investors are really dumping the stock at this point. And I think it's a hard pass at this level.
All right. Well, finally, we have Affirm Holdings reporting better than expected results, beating on both the top and the bottom line. This is a buy now, pay later company that has seen its stock soar more than 30% today, up 31.35% right now. Boris, what's your trade on Affirm?
So this is actually an interesting story because they are sort of unique. They're trying to carve out a very interesting space in fintech with this buy now, pay later situation, precisely because they're using a lot of high technology to create a customized solution for the customer, and they're ever expanding their base of retailers. As a result, growth has been tremendous, and it's really all about growth. This is not a stock you're going to invest into if you want to have any kind of quietude. It's very much a speculative trade. But if they execute as they have been doing in the past, and they're projected to grow another 30% going forward, I think it really has some very serious potential. The actual market for buy now, pay later is estimated to be as large as $500 billion by 2026. So if they carve out any kind of a leadership role within this segment, I think investors will be rewarded.
Boris Schlossberg, it's always great to see you. Thank you.